Hey everybody, welcome back to Pause for the Cause. This is our Pause for the blog, and we are going to talk about a possible change to the capital gains tax structure. Now, if you are familiar with the Fix for Capitalism, which is laid out either on this website, depending on where you're looking at it from, it can be found at thefixforcapitalism.com or www.pauseforthecause.com. However, in the system, we talk about an expanded capital gains tax bracket because currently the tax bracket tops out at only 20%, and that's at 445,000 X dollars. Now, we live in the time of billionaires. This is woefully inadequate and needs to be updated. I have not been 100% happy with the expanded tax bracket since releasing the plan earlier this year. Um, However, I do believe that I found a way that we can make it a little better and more equitable for everybody. And that way it ties the welfare of the lowest paid employees within the company to not only the other employees at the company, as we'll talk about here in just a little bit, but it also ties it directly to the shareholders of the company. So the investors of capital. So I'd like to kind of go over the changes that we've made. Now, capital gains are how the rich continue to get richer. It's unreasonable that they pay such a low tax rate. Now, since we're eliminating the entire tax code, all of the deductions, we no longer have a need to write off losses for investments. Therefore, we need to implement a change to the way that we tax the capital gains. First, we have to determine whether something should be taxed at the time of purchase as a sales tax, or it should be taxed at the time of sale as a capital gain. Now, if we are taxing it at the time of purchase as a sales tax, it would not be right to tax it again at the time of sale as a capital gain because it creates a double taxation. So we want to avoid that. So things like tractors and cars and boats and things like that, we should only tax those at the time of sale and not as a capital gain at the time of or at the time of purchase, not at the time of sale as a capital gain. So let's discuss a few things that we should tax as a capital gain. Now, I believe that real estate would be something that we tax as a capital gain because the longer you hold it, obviously, the more value that it turns into. So the value on it grows, and this is how a lot of people obtain value, and it directly impacts our society with real estate being a finite resource. Now, I believe we should roll out the simple solution for the housing crisis that I talked about in my last video, if you watch that, or my last blog. Essentially, what that would be is it would turn real estate taxes, charge them exponential. So for every property you own, your tax rate doubles. So it quickly becomes very expensive to continue to buy up all the property, and it'd just be a very simple fix that we could roll out immediately. Obviously, we want to give people time to sell any properties that they don't feel would be in their best interest to hold on to anymore. But it also give a lot of people the opportunity to buy houses that have not had that opportunity as well. But if we roll out the real estate as a capital gain, we could set it the same way. We could just do an exponential tax rate for real estate sales as well. So however many sales on real estate you have within the year, your tax rate doubles for your capital gains on specifically real estate. So this will help prevent people from exploiting the changes that we've made using the simple housing the simple solution for the housing crisis. And it'll also just kind of keep that greed in check for flipping houses and such. So, yeah, sure, you can flip a couple of houses, your tax rate will go up a little bit, but not if you're in the business of just flipping houses nonstop and preventing people from moving into them. There's the negative aspects that we want to try to dissuade through the taxation process. And once again, real estate is a very critical, finite resource. There's only so much of it available, and we need to make sure that a small number of individuals aren't able to manipulate our entire society by buying up all of that real estate. Now, the next thing that I believe that we should tax as a capital gain would be stocks and bonds. So we need to eliminate the separation of a short-term and a long-term held asset. And we tax all gross proceeds from stock sales and bond, or from stocks and bonds, whether it's dividends or sales, as if it was earned as income from whoever the issuing entity is. So in the Fix for Capitalism, if you're familiar with the plan, our tax rates are determined by using a company's lowest paid employee's salary. So I believe that we should determine all of our investors' personal tax rate using the same method. So if we think about it logically, we are investors in a company, whether we are investing our time as an employee or we are investing our capital as a shareholder. So either way, we're still an investor within the company. I believe that the welfare of the lowest paid employee should be directly tied to all investors within a company. To have a CEO be able to make 15,000 times more than an employee, it's not a good thing. That's why we address that in our Pause for the Cause with the Fix for Capitalism. Now, the same situation applies to shareholders with investors of capital. We shouldn't allow an investor to become insanely wealthy while treating the lowest paid employees of the company very poorly. There needs to be some sort of a direct correlation between the welfare of the employees and the welfare of the investors, whether it be capital or time. So that's why we're going to switch the way that it's done. Now, I believe that under this system, that people will be more likely to invest in a company with a lower wage disparity or support a higher salary for the lowest paid employees because it will directly affect their own income. Now, this will limit how much stock someone can sell from a specific company in a given year because they will have to claim it as income. And if they sell more than what the lowest paid, like if they sell more than 99 times what the lowest paid employee makes, then they'll end up paying all of that money to taxes because of the taxing structure. So it puts a limit on there. Now, what this means is it will directly affect the behavior of the stock market too. It will actually, in my opinion, it will actually take out some of the validity that we currently have with the stock market because you won't be able to sell stock and rebuy it the same day without incurring a taxable event. Every time you sell stock, you will incur a taxable event, regardless if you reinvest it back into the same stock, into the same company the same day. So this will help actually regulate the stock market and a lot of the problems that we see in the stock market as well, at least in my opinion. I'd love to hear your feedback on what implications you think that these changes would have. In my opinion, it doesn't actually cap anyone's earning potential. It just ensures that there is a direct correlation between the compensation amounts for the shareholders and the employees within a company, since everyone is investing something. So this is the needed check that provides the balance for the greed that is currently unchecked in our system. So this is the new verbiage for the plan. I believe I'm going to be rolling it out But let me know what you think. Do you think shareholders should be held accountable for the welfare of the employees that they're investing in? I personally feel like they should, but you tell me. I mean, if not, doesn't it just foster the idea that exploitation of workers is okay? Do you see any potential loopholes that could be exploited? I mean, the most likely scenario I see is that people will need to diversify their assets more broadly to continue to live extravagantly, or they'll just need to change their spending habits. But if you think about it, if you have someone that's invested in 100 different companies, they could still pull in, let's say, the minimum, the lowest paid salary of each employee at each one of those companies and have a net 1% tax rate. But it would cause them to diversify, and it would foster more diversity as opposed to monopolistic type thinking. So I think it's a net add. What do you think? Share your thoughts with me. As usual, I do greatly appreciate your time. I understand that time is a finite resource and something that we need to value more. So I appreciate your time. If you like this message, share it with your friends and family. You can also obviously share our support with the hashtags Pause for the Cause and the Fix for Capitalism. Check out pauseforthecause.com if you haven't already. We do have a peaceful protest that we're starting. I'm just asking that you not spend money at corporate-owned locations on days that end in an 8. And the 8 is the symbol for infinity. That's how long we want this protest to last, because greed has done a number on society. And we never need to forget what greed has done to society. So that's why I suggest doing this protest indefinitely. And all I'm asking is that you support local businesses on those days. So shop local, shop that small business, go to that, locally owned restaurant or whatever the case might be. But just avoid shopping at corporate owned locations on days that end in an 8. And let's show the world that we're ready for a change. So I appreciate your time again, guys. Y'all have a great day, and I'll catch you next time.